Hello again, everybody. It's Kevin Wadsworth here, and just following my broadcast on Kitco News yesterday, noticing a lot of the comments are quite sceptical about how useful technical analysis is. People calling it voodoo or mumbo jumbo and a total waste of time. I know those people are in a minority, and I think probably a large majority of people do appreciate that. There is a place for technical analysis, and you can use it to stack the odds in your favor. So, those who just turn a blind eye to it and want to ignore it for some reason are kind of missing the point, really. The point is that these trading algorithms that do a lot of the trading on behalf of human beings, really, they do it automatically, and they do it because people are setting stop losses and because people are aware of where the lines in the sand are. So they sell at particular points, and selling leads to selling, and that leads to more selling. It doesn't stop until you get to a support level. And these lines that I'm drawing on the chart, they're not made up. It's me using a sort of learnt ability through years of sort of statistical and technical analysis and predicting the future in my job, the way that I do, that I'm kind of able to spot these patterns in a way that perhaps some people aren't. So, that's why I'm sharing them with everybody. I don't get it right all the time. Of course I don't. And sometimes the patterns break down. That's to be expected. What we're trying to do here is to stack the odds in our favor. And as I tried to describe in the interview, it's a little bit like a horse race. This is stellar lumens that we're looking at on the chart here. And without technical analysis, you'd have had no idea what was going to happen down here at point 2. Stellar lumens was in a downtrend. The line was just going down and down and down. And without technical analysis, you would have just thought, well, price is just going to keep on going. What's to stop price from continuing to fall? Technical analysis allows you to draw the line in the sand. It's this downtrending resistance line. It looks as though some of the points come out of it because this is a daily chart we've got here. On the weekly and monthly chart, this line is much more sort of representative of the price action. Okay, so we can draw the lines on the chart, and so people say, well, they're just lines on a chart, they don't mean anything. Well, they do mean something, because throughout this whole period of time, it's this line that has stopped stellar lumens from rising. Okay, you can come up with all sorts of fundamental reasons why cryptocurrencies were in a downtrend, but you need a roadmap. And the roadmap that I'm talking about here is being able, as a technical analyst, at this point here, at point 2, if we just ignore the future, everything on the right-hand side of this chart is the future. We didn't know it was going to happen. So I was able to draw this downtrending wedge pattern along with the arc as we got these touch points on the arc, and the wedge sort of became very clear. We've only got 2 points on the lower support here, but then when we got the third point touching just where you'd expect it to, it confirmed that line. So all of this technical analysis, it can appear a bit flaky sometimes, especially when you've only got a couple of points on the line, but you put those on the chart expecting that at some point in the future price is going to come down and test that and confirm it as a support or a resistance line. The earlier you can get those lines on the chart, the better, because then you're aware that they're there and you're ready for the reaction that's going to come. Also got the moving average on here, which is always very important, the 12-month moving average. It's another indicator that when price goes through that and above the declining trend line, and we've had a positive reaction on the edge of the arc, that good things are going to happen. So as time went on, what happened? Price bounced off the bottom of the arc. It bounced off this lower support line. It went up through the resistance line. It went up through the moving average. Not only that, but it came back down to test the moving average on a couple of occasions, which is perfect technical analysis outcome. It's what you want to see happening. It's confirming that price is gradually starting to turn upwards, because rather than price being contained by the 12-month moving average, it's being supported by the 12-month moving average. And all of this isn't just pure coincidence. It's something that the traders know. It's something that intelligent investors know. Intelligent is the right word, but clued up investors know about this. And of course, the trading algorithms know about this. So all the algorithms know that once you get above these key points, that the probabilities of continued upside movement are greatly increased. So at this point here, it's possible for me to say with good degree of confidence with all of the cryptocurrencies, as I did when Bitcoin was around $9,000 or $10,000, that this was a strong indicator that price is going to move up. Nothing is ever guaranteed, but it's a strong indicator. It's like being able to identify at this point that in the horse race, stellar lumens and cryptocurrencies generally were going to do really, really well compared to other asset classes. So we're picking points in time where this particular horse in the race is going to outperform. And that's the whole point as an investor. You want to pick these points in time and shift your funds into sectors and stocks. And the same thing happened with uranium a while back, of course, last year, when I was able to identify the same series of conditions that gave me the confidence to say that uranium was starting a new bull market. And with the US dollar, when it turned down, and with commodities, currencies, and all the rest of it, all of these different markets are governed by the same technical analysis techniques. So what happened next? Well, price moved up and it bounced off a developing uptrend line. Same as we had downtrend lines here, you have uptrend lines on the way up, 12-month moving average, and we built out a bearish rising wedge, which I identified in real time to my followers on Twitter at the time, because it's before the website. It was probably around about the time the website was being initiated, or perhaps a little bit before that. These bearish rising wedges began to become evident, and they're bearish because eventually they'll break down. So what's happened now? Well, price is testing the edge of the arc at point number 3. It's coming down into the area of the 12-month moving average, which I'm not comfortable with because we're actually below the 12-month moving average at the moment. It's at 25 cents and we're currently at 23 cents, testing the edge of the arc and really testing the support line of this bearish rising wedge really in a tough way. If this breaks down, then in the whole point, so I'm not saying, at this point price could go up or price could go down. Yes, okay, so what kind of a forecast is that? It can always go up or it can always go down, but that's not the point. The point is being able to identify the critical points, and we're at a critical point here because we've got the 12-month moving average, the apex of a descending wedge, which is being kind of back tested in the area of this support line and on the edge of the arc. So the whole point of technical analysis is to give us a warning sign that this is a cliff edge. If you're navigating your way through the mountains in thick fog and you can't see where you're going, don't you want to know where the cliff edge is? Or do you just want to carry on walking and step off it? Well, with stellar lumens, we're on a cliff edge here. If we step off it, then the targets are much, much lower. I warn you about that serious warning right across the crypto sector. Same with Bitcoin at the moment, testing the 29 to sort of 32,000 level. It's on a cliff edge, just the same as stellar lumens is. So we want to be aware of where these cliff edges are, because we get a daily close and more worryingly a weekly close below the cliff edge, then gravity is going to take over. What I mean by that is that the trading algorithms will take over and selling will suddenly kick in, and then more selling will kick in, and the whole thing will cascade, and goodness knows where it's going to stop, probably down at the bottom of the arc again. What's that? Well, yeah, okay, we're not thinking about that too much at the moment because it's pretty horrifying for the entire crypto sector. Which brings you back to fundamentals. Can these cryptocurrencies return to close to zero, which is where they started? I'd argue probably not, because they're so widely used, so widely held, not just by people like you and me, and relatively small-time investors, but big-time investors, institutions are now holders of certainly some of the larger cryptocurrencies like Bitcoin, for example. So fundamentally there are reasons to think that this will hold and trend upwards towards my original target box area at the top right corner of the arc. So that's just a little walk through and talk through why technical analysis is, in my view, really, really useful. And for some of the skeptics who may be looking at this, just to perhaps have a little think again as to why we use technical analysis. It's not voodoo, it's just having a roadmap and being aware of what's going on around us. Okay, that's it for now, and thanks as always for watching and listening. There'll be more to come in the next few days and weeks, of course. Thank you.